If you're a veteran with some credit struggles, this video is for you. I'm going to be doing some rapid fire questions and answers of some things that I see as a loan officer regarding credit and the VA home loan process. So let's just jump right in. What is the minimum credit score to get a VA home loan? Well, that one's an easy one. The VA home loan has no minimum credit score. But it leads to the next question. What are lender overlays? Lender overlays are rules over and above what the VA requires. The VA, even though it does not have a minimum credit score, it has minimum standards. That being said, some lenders have rules over and above the VA rules, and those are called lender overlays. Next question. Can manual underwriting help with approval? Absolutely. The VA home loan is extremely flexible. Manual underwriting gives you a chance to tell your story and show why you are a good credit risk. And it shows things that in the automated underwriting system it wouldn't show. And you can get many times you can get approved in situations. And I do a lot of these actually. So yeah, let me know how I can help with those. Next question is, what are extenuating circumstances? Extenuating circumstances are either medical issues typically, or job loss. It can also be inability to sell the departing residence. And they're very important because typically when we do those manual underwrites, that we do look at the past 1 year payment history. And if you have any lates, typically you can't get it approved, but extenuating circumstances are a way around that. Because if you have job loss or a medical issue that happened in the past year, but that's been resolved, those waiting periods can be waived. So that's very good. And I have a whole separate video about that. Now, some people will say, well, VA didn't really have any rules about credit issues. And that's true, that they really only talk about mortgage lates. They don't talk about collections, but every single lender I've talked to will look at the past year of collections and charge-offs to make sure you haven't anything late in the past year. But if there's extenuating circumstances, you get around that. And like I said, check my other video out where I go a lot deeper into this topic. Next question, can I really get approved the 500 credit score? In theory, yes. The downside is that typically someone with a score under a 550 is going to have lates in the past year. And in those kind of scenarios, it can be very difficult to get approved. But in theory, yes, you can. And I have lenders that would approve that. By the way, if you have any questions, give me a call. My number is 937-572-3713. You can comment below. Next question. My credit score is over a 580. Why was I declined? Well, first of all, my score doesn't match what you'll see on Credit Karma and those websites. And secondly, we do look at things other than just the credit scores. The credit score is one piece of the process. We will look at that payment history. We will look at debt ratios. We will look at residual income. And so oftentimes when somebody's score is above a certain number and they insist that they should have been approved, it's typically there's something in the payment history that is causing that. Next question, what does the minimum credit score get approved by the big mortgage lenders, Rocket Mortgage, those kind of places? Typically, I don't know exactly because they change their rules often. But typically, I know they're usually in the 580 to 620 as their minimum credit score. But honestly, there's no real reason you need those because I can beat their rates anyway. I have more experience than they do anyway. But oftentimes people ask, and I know on Google they ask. So that's your answer. Typically, 580 to 620 is where they're at. So next question, who's the best lender for low credit scores? I'm kind of biased because I'll say me, but in all seriousness, go through a mortgage broker because of those lender overlays that we had mentioned a minute ago, that each lender is a little bit different on their requirements. And when you start getting into these lower credit score scenarios where it's very specialized, it can be hard because if you're a lender with only one set of underwriters, one set of rules, and you have no other options, it can get very hard to get approved. But me as a broker with 150 options, I can find lenders that will do things at the very base of your VA guidelines. Next question, open collections? Okay, possibly. It depends how old they are. If it's a new collection, typically no. But if it's something that's medical, we can typically not even use medical. Every lender I know of would let us exclude medical. But if it's a credit card or installment loan, those types of things, and it's within the past year, you better have some extenuating circumstance for sure. Next question, are charge-offs okay? Again, it depends on when it happened. If it's over a year old, oftentimes we can get around that for sure. Mortgage rate's okay? It depends. If it's within the past year, you better have some very, very good extenuating circumstance and a very, very good letter of explanation. And even then, that can be tough. If it's over a year old, just explain it. You're good to go. Kind of similar. Is bankruptcy okay? It depends if it's a Chapter 7 or Chapter 13. If it's Chapter 7, you have a 2-year waiting period, although it could be reduced to 1 year. Again, with extenuating circumstances, how important those extenuating circumstances are. And if it's on Chapter 13, it's 1 year from the filing date with 1 year of payments made on that. Kind of similar is foreclosure. And I have videos about bankruptcy and foreclosure, by the way. Check the description below. Is foreclosure okay? 2-year waiting period on that. Again, check the video about that. It would stay on your entitlement, so that could affect how much you can buy with 0 down. But you can also settle those foreclosures to get your entitlement back. Next question, I pay my collections off. Why was I declined? And I see this often with people with recent collections. They think just because they paid it off that everything's good to go, and why is their score not 700? Well, that payment history is still there. And so, yeah, credit's probably still going to be a pretty low score because that history is still there. So just because you paid it off doesn't mean it's all good to go. In fact, if you have collections that are recent, I recommend credit repair, just because they can do what's called pay per delete, where they pay the collections off but have a agreement with the bill collector to take that off of the credit report. And that's definitely the way to go on those. Next question, what is payment shock? Payment shock is buying a home that's more than your rent. And this can be important, especially those manual underwrites, because they're looking at cash flow. Now, each lender is a little bit different on payment shock, because the VA doesn't have really any official guidelines on payment shock. But some lenders are extremely difficult to work with on payment shock. And again, that's an advantage I have as a broker, is I can look at each lender and figure out who's more selective on the payment shock to figure out who's going to be a better option for you. Next question, my ex went late on the loan. Will that count against me? It depends. Was the late while you're married or after you got divorced? It makes a huge difference. If it was while you're married, that's considered a contingent liability, which means their responsibility is your responsibility, which means just because they're late, you're late too, which kind of sucks. However, if it's after the divorce, so I've seen some where they put in the divorce decree, the wife pays my Honda Civic. Well, but the wife didn't pay it, and now it's on his credit. That kind of scenario, we actually can exclude that, believe it or not. We can actually exclude the payment. If we can show payment history, we can exclude the payment and also exclude the payment history. So that's definitely something to consider. And it's definitely one of those areas most loan officers have no idea you can even do this. Next question, can I put a lot of money down and get approved? It depends, not for VA. You can put a lot of money down and suddenly get approved on some of these alternative programs. I do have some lenders that will suddenly get much more flexible with approval if you're suddenly going to put a lot of money down. Typically, it's gift funds from family, because most people with bad credit don't have money to put down. But there are ways around it. It's just you can't go VA, because VA is much more selective on credit than some of these other programs. Kind of similar. Can I get approved if I have a cosigner? Yes and no. The cosigner can help with income boosting. If you have very little income, there are ways to use a cosigner to boost that income for qualifying purposes. But you can't use a cosigner to get rid of bad credit. So if you have a 500 credit score, you can't go have grandmother's 700 credit score cosign. I know it's a little different because on car notes you can do that, but on a mortgage, what will happen is we look at the lower score. So we still look at that 500 score. It doesn't really get around that. So unfortunately, having a cosigner doesn't really help you in that kind of scenario. You just got to go get credit repair and fix it. Are VA loans easier approval than FHA? Absolutely they are. VA loan is the most flexible mortgage program out there. No questions asked. If you have any questions, feel free to give me a call or text me at 937-572-3713 or comment below. Next question, are VA loans easier approval than conventional? Absolutely they are. It's not even close. And it blows my mind how many realtors will trying to push veterans into conventional mortgages. And it's crazy. Why would you do that? The VA is the most flexible program out there. No ifs, ands, or buts. And I will argue with anybody that says they're not, because we see it all the time. It's a very, very flexible mortgage. Can I get approved with no credit history? Absolutely, you can. Actually, we use what's called alternative trade lines to get you approved. So that's definitely a possibility as well. Next question, are defaulted student loans okay? And yeah, I'm sorry, defaulted student loans are not okay. What happens is they go report to something called CAVERS. And CAVERS is a federal government system where they look at your defaults. And what will happen is that you'll need to get that settled. It doesn't have to be necessarily paid off. It at least needs to be paid current, get on a good payment plan. And definitely out of default before we can approve that. So anyway, I hope you're liking what we're talking about so far. Please like and share this video, and let's continue. Are delinquent taxes okay? Delinquent taxes are not okay. Delinquent income taxes, you'll need to have a settlement done before we can approve that. Next question, are judgments okay? No, they're not okay. They definitely need to sell those as well. Anyway, there are just some tips regarding bad credit and the VA home loan. Now, I have a lot of other videos on that, so be sure to check the link below to see my other videos about VA home loans and bad credit.